Nice. So Mary, you're the co-founder of Loopscale, which is a modular lending platform for the next generation of on-chain assets. So wondering if you could just tell us more about what Loopscale is and I guess what gap you saw in the DeFi landscape that this product is filling.
Yeah, so yeah, you kind of got that. And so we're an order book based lending protocol, and lending protocol on Solana. And we really built Loopscale in response to limitations we saw in the DeFi lending landscape, both more broadly and now it's kind of particularly pertinent with this new phase of crypto we're entering. And can definitely go into kind of the distinctions and what that actually means for the end user for it to be built with an order book. But that's kind of the TLDR.
Yes, help us understand what that means.
Yeah. So, I mean, I think it's interesting because like the two biggest kind of products in finance are like trading and credit markets. And on the trading side, we've seen a ton of innovation, especially in the context of, okay, now we have Solana, order book based markets. But when you look at lending, a lot hasn't changed from like the very first or second version of Aave up until today. And you have kind of variants of that. And even with like Morpho and these like curated pools, there's been some variation, but a lot of the same structural issues exist. And so one of the biggest kind of differences between us and pool lending protocols is the base primitive is a loan between two people, and you can parameterize that loan in the same way kind of a TradFi credit product works. And what that actually unlocks on like a user basis is one, capital efficiency. There's a ton of like idle liquidity requirements with the pool-based model. Two, and this is kind of what I think is the most important aspect, is you're bottlenecking growth when you have these kind of huge startup requirements for a credit market, and you can't launch an asset with a credit market off the bat, when in reality it shouldn't be like your asset gets to this size and then you get to borrow and lend against it, and they're actually a lot more synergistic. And beyond kind of how it limits growth in the asset side, also on like the credit product side, you have a very specific type of loan that you can have with a pool-based lending protocol, which is this infinite duration variable rate loan, which doesn't really exist actually at all in TradFi, and no ability to support kind of these much bigger markets between like receivables and repo markets. And so in the short term for users, that's like being able to borrow against LP positions, natively staked assets, and all these assets that aren't productive on chain. But for us, like longer term, the thing that's exciting is all of those other markets.
Are there any like downsides or trade-offs of going the order book model versus the kind of pooled liquidity model?
Yeah, definitely. So there have been like attempts. So like a lot of people don't know this, but the first version of Aave was actually like this like peer-to-peer order book model. And kind of the two primary constraints people see when they hear order books and lending is one, like liquidity fragmentation, and you feel like it's like this NFT fi thing where you're putting out this request and you have to wait, and that's annoying. And then two is that like immediacy aspect where like I want to be able to borrow things instantly. I don't want the complexity, and there's just like this UX issue. So there was a lot we did while we were like in closed beta to abstract a lot of that. So the kind of end user experience feels a lot like a pool, and I can explain some of those things we did, but you still maintain like the ability both at a protocol level and a user level if you kind of want to use that part of the UX like in advanced mode, where you're still interacting at kind of the very base foundational level of the protocol and still can access all of those protocol parameters. But in a lot of ways, there's like access to all of those things creates a ton of advantages. Like right now on pool-based lending protocols, I feel like this is also a lesser known thing, is you're only pricing right based on the utilization of an asset. So you're always pulled by the worst collateral asset in the pool, and you can't kind of price risk any more granularly than that. And so going back to what you were asking about, like those trade-offs. And so we built a lot of abstractions where the loans like auto renew at the end. So it's like a fixed duration, but you don't have to wait for it to liquidate. There's a way to delegate that order book parameter aspect to a curator. And then kind of one of the most important aspects is this idea of like these smart orders where you're assigning a rule set across the order book versus placing these individual orders. Does
Right.
that make sense?
Yeah.
And there's a
Well,
lot of different things that I could get into within that.
let me take you a little bit deeper here because I
Mhm.
think when you say it's sort of this peer-to-peer based one, I definitely have flashbacks to early DeFi and yeah, the friction that exists there, and it sounds like in your answer here, the sort of ability, the advancements in UX technology, et cetera, has allowed you to abstract a lot of that away. But maybe could you take us through the initiation of a new pool and how people participate in that?
Yeah, so if you are a lender, for example, you can like set up a pool of capital, you assign a series of eligible, or you set up a pool of principal, you have eligible collateral, you're assigning rates and LTVs to that collateral, and basically setting up this limit order that a borrower comes and fills. And so you have this capital efficiency that it's like spread across all these markets. And we use the term order book, but it's really just like this front end filtered view of those orders. And so the only thing you need for a credit market to exist is literally just one lender. And so on kind of, and then one step above that, we introduced Loopscale vaults, which acts a lot like a pool in that you have the benefits of like, you're not making those decisions, it's socialized, but all of the liquidity is still settling to the underlying pool. You just have those parameters set by someone that isn't you. Does that make sense?
Yes.
I'm,
Interesting.
I'm curious how it's been bringing this to market. I think liquidity in DeFi is, I think, pretty sticky, even if, the tech advances, people are comfortable with, Curve or Aave, maybe they're in the Discord and kind of have their community there. So I'm curious maybe for you to comment on kind of the challenges of bringing this like technological improvement to the market and making it, understandable to people on why they should use it and switch their capital
Yeah.
over.
It's interesting you say that because it is true. Like TVL is sticky. It doesn't matter if you're offering like 5% better rates, like there's $1 billion that does not care. But for us, I mean, so to your point of like, how do you even attract? And so we spent a really long time in closed beta. It was like August of last year to April of this year. And that's when a lot of those like features like the vaults and the auto renewing loans happened. And I think that was something that I was really glad we did to kind of understand the places where even like sophisticated users were falling off. And I think that product that we ended up launching with was like there was the right amount abstracted where I think anyone could use it and had like a first action on it. And so I think that was a big thing. And one of the things we noticed is like even the big depositors like aren't necessarily using like the sophisticated functionality. I think that's something that's like interesting for an institutional participant, but there are like big whales that they just want the one click deposit too, and they're not trying to like customize their risk. So that was like an interesting learning for us as well. But a lot of kind of the how we think about like TBL growth and stuff like that is we've spent a lot of time now partnering with issuers. And I think we have found ourselves in a position where we're really like available to help scale assets and new assets that launch. And for like things like Orca LPs or Sanctum LSTs, there's like this inherent incentive for these protocols to deploy liquidity on Loopscale and support and only lend against their LSTs, only lend against the LP positions and create more end value in TVL for their protocol. So that's been kind of one of the interesting approaches that we've been taking that are almost more product led than kind of more marketing led, I guess.
Yeah, that's interesting. Can you put a finer point on the role of curators? Like, is this a new type of job for somebody?
Yes. So I don't know if you're familiar with like obviously like the Morpho like curator, and so it works similar to that in terms of you're managing these parameters and folks get to deploy liquidity and veto these parameters over time. But essentially, the goal is optimizing towards this strategy that all the depositors have like a vested interest in. But I think there's also a role for curation also in the context of more thematic deployments, like what I mentioned, like in the support of like a Sanctum vault or an Orca vault that are focused on kind of an external business initiative.
I'm curious how you're strategically approaching your points program and eventual token launch. Is this the kind of thing where, there are tried and true best practices that you're kind of just following and they work, or are you doing something different there?
Yeah, I mean, I feel like there's never tried and true, and the market changes so quickly. What was tried and true this year is failure of last year or whatever. But we are definitely like putting community first. And I think there's a lot of learnings and things we're taking away. I think there's like something Solana specific. I think there's things to learn ETH. And that's always been something that's interesting for us is like it feels like you can kind of get like a heads up on metas or just like what's going on. And I think kind of longer term, we hope that a lot of what we're doing and focusing on is more of this like not just like within the Solana ecosystem or within DeFi, but building out these like DeFi mullet type products and bringing in communities that are from like fintech apps and Web2 apps and like working on the bridge between DeFi and TradFi in that way. And so we are definitely taking a long term approach to all of this, but definitely excited about kind of rolling out the points program in a bigger way coming up soon here.
Mary, I'm just, I guess, personally curious. What were you doing before you were doing Loopscale?
Myself and my co-founder were working on a different like defense tech startup, so
Okay.
more startup stuff, not related to crypto,
All right.
and fell down this rabbit hole around the same time as a lot of other people, kind of pre-COVID, going into COVID.
Interesting. Defense tech to lending tech. Are there
It's
parallels
also
there?
it's no, not at all. I mean, actually, I feel like I feel so lucky for crypto in some ways because I just feel like I discovered an interest like with finance and economics that I never like studied on like an academic basis. Like I just did engineering in school, and I almost thought like economics was back then like this more of an arts and a humanities and less of like a science and a math. And I think like it's so cool to find something after you graduate that you're like academically like super excited about and like want to learn about. And so that has been like a super fun part of the journey is just like really, and my co-founder has like way more of that background, and so it's been just cool to also learn through kind of absorption from him.
Well, thank you for coming and pushing crypto forward instead of just joining Palantir.
Of course.
I mean,
Sure, good
maybe
chat,
Thanks
Mary.
for having me.
yeah,
Cheers.
maybe last question before we let you go. I'm just curious what product or like asset type is kind of finding the most fit within your platform right now. Is it kind of long tail meme coin stuff, RWAs? Is it the vaults?
Yeah, so there's definitely like a huge growth in like the fixed asset, like the PT products. I think you saw that on ETH as well. We've had a ton of success with the RWA launches. Like, for example, we just recently did a partnership with Onray, which is doing like tokenized reinsurance. And we're like the single biggest minter of Onray now and count for like 45% of their supply. And so I think that because of like the mechanics of what we're able to introduce with like the structured products and kind of simplifying a lot of those flows, but a lot of the tokenized RWAs, I think, are a thing that's like happening, and it feels like there's a new one every day, and they're pretty exciting.
Got it. Very cool. Well, thanks for joining
That
us,
is hot.
Mary. Yeah, recommend checking out Loopscale. It's open, right? Anyone can go and
Yeah,
deposit and use the product. Sweet. Appreciate you jumping on. We'll check in with you maybe in a few months and see what's changed.
sweet. Thanks for having me.
Thanks, Mary.
Peace.